2.17% higher. I want, this probably seems to be an expiry related piece, because there is no other fundamental reason why this has happened. No one quite understands in the dealing rooms as well about there being a fundamental reason why Nifty IT should sell off the way it has. So that's the other thing to keep in mind. Market breadth should come up on your screen next and just show what the advanced decline ratio is looking like, and that'll come up in just moments from now. Well, more decliners than advances, obviously, but the breadth is now at the worst point of the day today, nearly 1:4 or 1.1:3.5 in favor of the declines, and that is the other worry. But it's the expiry day. Volatility, last point before we get to specific stocks, and India VIX should come up on your screen, was sedate, still about the same levels. Elevated, not quite going further, which is maybe a good sign. Interesting to see whether this breaks down over the course of the next 24 hours. Just the heat map, one final piece on the large cap space at least, and a lot of red, as you can see on your screen, very little green. ICICI Bank, HDFC Bank, SBI, Axis, so banks are holding out. Kotak Bank, the top gainer at the start, is still in the green, but a lot of pain everywhere else. Tata Steel post results, yes, but then the kind of cuts that we've seen, not just in IT like Tech Mahindra, but Shriram Finance, Titan, Power Grid, is just across the board that we're seeing a lot of pain. And suffice to say, Tamanna, it's not that the broader markets are bereft of pain, because the mid caps too are down about 1.25%.
Absolutely, Niraj. In fact, it's a whole round kind of a situation. And if you look at the BSE 500, you have 409 out of 500 stocks in the red, and only 90 advancing in afternoon trade. So it's a tough afternoon to say the least, apart from the key levels on the Nifty looking a bit difficult. The small cap and mid cap indices also tough. Let me just pull up some of those top losers to give you a sense of what's happening. And of course, Tata Steel is pulling the entire metal index down. Metal index, the NSE metal index, the top loser in terms of sectoral indices today, and Tata Steel largely responsible for it. We'll go into more details about why even the con call has not assuaged investor fears, but Hindustan Zinc, Hind Copper, that entire lot facing selling pressure today. What else is hurting? IRB Infra. There was a promoter stake sale, about 1,500 crore rupees. That's out of the way, but the stock, nearly 9.5–10% down today. Cummins is the other one. Numbers seem decent on the face of it, but clearly the street has not liked what they have seen once they've gotten into the details. 6% down on that. Alchem Lab, the con call is talking about revenue growth guidance of 7 to 8% based on their US market launches. Alchem Labs also hurting. I would say one standout of what is doing well today, and a bit of a surprise, is Emami. Emami, clearly the stock of the day as well, in a sense, where their numbers have been good. I mean, beaten others in the space, 17% up. Nearly 24 hours after the numbers came out. Remember, about 3:15 yesterday is when the first cut of numbers came, but it was at the tail end of a very volatile closing session. Today, since morning, Emami has been in a great mood, and definitely that is one stock to watch. Apart from that, I would say, nothing really looking fantastic this morning. Thermax doing okay. Interglobe not too bad. I just want to pull up what your Mazgaon and Cochin Bharat Dynamic kind of category of stocks are doing, and they're also facing quite a bit of selling pressure. Mazgaon Dock about 2% down. Cochin Shipyard, after completely beating street estimates in terms of their numbers, etc., and that run up, now facing some pressure. Bharat Dynamics is all right, just about hanging on in the green. Let's get a view from our experts this afternoon. Jay Bala, founder and chief market technician, Cash the Chaos, is with us. Dheera Vachar, head equity research analyst at Latan Manharlal, is also with us. Welcome to both of you. Jay, let's start with where you see the levels, considering the kind of crack we've seen. We are sub 22,500 now. Where does the support come in?
Yeah, the support is very close by for the Nifty. It's about 22,440, 22,450. And the next below that is about 22,320. So we have a couple of supports coming up for the Nifty. But, the price action is very similar. If you had sold the new all-time high in 2024, that's a thematic, strategy. All new highs of 2024 have got sold out. and they've got pushed back with the previous range. And this time is no different. And the Nifty is repeating the same pattern. And heading into the elections, it's repeating the same thing. But the medium-term support comes at about 21,820. Post-elections, if that levels were to break down, I would anticipate a medium-term correction that takes hold in the market.
What about at the Bank Nifty, Jay? Any view on the Bank Nifty this afternoon?
Yeah, the banking index is slightly weaker than Nifty, and in particular, it's the private sector banks that's clocked the lower top, and that has potential to drag the Nifty. But once again, no significant supports have been broken for the banking index. It's about 46,500 to 45,800. That's the crucial support for the Nifty Bank Index. So as long as that's maintained, the corrections will remain shallow. But once that's taken out, that's the equivalent of 21,820 I mentioned for the Nifty. So once those levels get taken out, that will transform into medium-term correction.
The Bank Nifty today 0.5% up is perhaps the only sort of saving grace in this market. Before we get to our stock of the day, I'm quickly going to go across and get first views from Nirav. Nirav, the broader take, of course, but also specifically on Tata Steel. Now that the numbers are out, the management has spoken, con call, first round, etc. done. Are you seeing any reason for the kind of panic we're seeing today?
Yeah, good afternoon and thank you for having me on your show. I think Tata Steel numbers were pretty decent, but mostly in line with the expectations. We've been seeing that the domestic operations, the steel operations have been quite strong. And I think the performance was on expected lines over there. And the European operations have been quite muted. So I think pretty much the scenario continues to be the same. So no positive surprises, and that is the reason I think the stock has given up some gains. Going forward, of course, it will require some kind of margin expansion, etc. to happen, which is looking difficult at this point of time because there is a possibility of the coking coal prices moving upwards, and that is likely to hurt the margins in the near term. So that is the concern that the market has got at this point of time.
That's a story with Tata Steel and a bit of, quite a bit of weakness near its days low, almost near its days lows now. Jay, just a quick word on Tata Steel.
Yeah, Tata Steel might have completed a medium-term move from its 2022 low. So, a bit of caution. Tata Steel and Power Grid have a similar price structure. So if Tata Steel were to close below 155, that will signal a larger correction could be taking hold.
Mm-hmm. Okay, well, on one side it is Tata Steel and the other side is Emami. The results came in market hours yesterday, but the true rally for the stock has happened today, up nearly 18%, or at least 16% was when I last saw. And yes, currently about 15.5 after it got a big thumbs up from brokerages. My colleague Mahima is joining us now with what is the real reason behind this zooming rally in Emami. Mahima, what's impressed the street to take it up double digits on a day when the markets are really cracking?
Right, Niraj. So, a decent set of numbers, but what has really stood out is that it has outperformed a lot of FMCG majors in terms of volume growth. Now, in terms of the financial numbers, where the net profit was up around 3.6%, revenues were up around 6.6%, but in terms of gross margins, they saw an uptick of around 270 basis points, and volume-led profit growth is what they've witnessed. Domestic business grew by 8%, and overall, in terms of value versus volume, also the growth has been very nice, around 6.4%. Material costs have slightly declined. However, there was a huge uptick in terms of A&P spends, which is around 39%. They've also introduced 35 new products and variants that were launched in FY24, which has really worked well from them. Something that's really worked for them is the strategic subsidiaries of the Man company, that it poised a growth of almost 54% overall in FY24. And In terms of its key con call highlights, well, the management is confident of achieving double-digit top-line growth in FY25. The company expects to see more margin expansion in FY25 again, and they're also expecting a few price hikes in certain categories and expect the price hike to be around 2%. And overall, in talking about the rural demand recovery, that has always been, FMCG's play. We're seeing rural green shoots in the overall rural demand space, and we did speak to the management of Emami, so listen in.
We also feel that the trajectory is turning and rural has started picking up. This quarter witnessed a rural growth as well, while general trade, which was till date was declining, has also shown slight growth. So, and all the channels have picked up well, and all the channels, the brands are also doing extremely well. The summer has been good. The forecast for the monsoon has been good. So all these favorable factors are expected to deliver good growth in the times to come, and has also been witnessed by the performance in the last quarter.
Relatively, Emami has done well. There's no doubt about it. Rural demand is picking up, but that's been a similar story for this space. I'm going to come to Niraj first on your take on Emami and whether you see merit in the kind of up move. What would you do with it right now?
Well, about Emami, of course, it's been a strong performance. The volume growth has been quite impressive. And this has come after a long time, but I think some of their brands like Dermicool, Navratna have started picking up quite well. It caters to the rural segment, and there have been green shoots of recovery in the FMCG sector, and that is being reflected, of course, in the performance of Emami, as well as we've seen in other stocks also like Dabur, Marico. So I think the FMCG sector has really been a sort of a sector which is on the comeback as far as Q4 is concerned. And I think towards the fag end of the earnings season, we've seen Emami perform extremely well, which is likely to boost the prospects of the sector again.
But so Nirav, are you, therefore, sorry if I missed it, but are you a buyer at these valuations of an Emami?
No, not at these valuations. I think this should have been accumulated much earlier. I think it was the most opportune time to look at stocks is when you have a good sector which is going through a lean phase, because typically at that time the managements tend to concentrate on building up the brand value, putting more and more investments in advertising and promotion, building up a strong distribution structure. So I think most of the FMCG companies have done this kind of exercise, and that is being reflected when the demand is making a comeback.
Okay. Jay, are you constructive here because it's had a good run and it's not buckling down today on a bad day?
Yeah, if you recall what I said earlier in the month of May or probably late April, I said that the FMCG has potential to scale all-time highs past 60,000, and the way it would come from HLL and laggards like Emami and the Dabur might be contributing to the movements. But I think Emami has got further upsides to work with. Just all-time highs about 687, and probably that's the price objective for the stock. And when it comes to the overall sector, if as long as 53,000 holds for the FMCG index, I think 50,000 holds that's the support for the FMCG index. If that were to hold, I think the 60,000 potential is still possible. Once again, being led by Emami and counter and bounce in Britannia and Nestle. But the leadership is not going to come from the main heavyweights. So in particular, Emami has got short-term upsides, but it's a bit late to buy at current levels because the risk rewards are getting quite skewed. Upsides are about 5 to 7%, but whereas the risk reward, if you are to get in here, is about it's not even 1:1 risk reward. So it's an avoid at present levels. For holders, they can maintain with trading stocks.
Okay. Well, that stock is now 17% higher and just doing so well. Anyways, time for a quick break. Stick around, viewers. We try and talk about some of the other movers and shakers in today's session, and try and get you some expert voices as well. Stay tuned. Back with India Market Close right here on NDTV Profit, just trying to take stock of what else is in focus today. Remember, we spoke about how ITs had a really bad day. Persistent is now down 4%, Tech Mahindra about 3.5%, and frankly, that is, to my mind, the sector of the day. None of the stocks are in the green. That is telling something. Now, Jay, don't need anybody to tell that the sector is really under pressure today. The question really is, out of those names out there, one, does it look like Nifty IT could go down further? What are the levels or downsides that you're looking at? And within those names out there, what is looking the weakest?
Yeah, if you recall, when TCS clocked 52-week highs, I said that the move to all-time highs for TCS looks very suspect. And I've been questioning the strength in Nifty IT even from that time onwards. So, and I've also said that if anything that's going to go back to the 2022 low first, it'll probably be the IT sector. The significant support for Nifty IT index is about 30,000. Once that's taken out, I think the move towards 26,000, which is the 2022 low, I think a breakdown below that is getting cemented. And the weakest have been the outperformers, the mid-cap space. I've been bullish on Nifty IT since October 2021 or so. And I cautioned that Persistent, Coforge, and all that, are making a turn in April. So, it's not a surprise that Nifty IT is coming under pressure. And I have a short call today on our IT stock, which is Birlasoft. Birlasoft, I have a short call with a stop loss at about 641. I'm expecting it to drop to about 520. So this is in line with the market's price action. And I'm expecting further weakness to kick in for IT names. So, but I'll be watching 30,000 on the Nifty IT index like a hawk. Once that's broken, I think a lot of downsides are opening up.
Yeah, a lot of downsides are opening up for the IT stocks as well. But, we've been talking about Tata Steel, and Tata Steel is clearly one of the key stories this afternoon. My colleague Samina spoke to the CEO and Managing Director TV Narendran. Here's what he had to say on the growth of the steel market in India. Listen in.
I do expect that the Indian growth will be more than the GDP growth rate. I'm talking of the steel consumption growth. Okay, because traditionally in India, the steel consumption has lagged the GDP growth rate because we've traditionally had consumption-led growth. But given the focus on infrastructure over the last few years, and hopefully the infrastructure spends will continue, we expect that the steel consumption will grow at a higher rate than GDP growth. So if the GDP grows at 6 to 7%, we expect the steel consumption to grow in the 8 to 10% range. So even if you look at last year, it has grown at 13%. I think last quarter was 10%. So hopefully 8 to 10% is going to be the norm for steel consumption growth, and which is consistent with what we've seen in other developing economies at this stage of their development. So that's what we're positive about, and hence a lot of our growth focus, capex focus is on India.
All right, so that's the story with Tata Steel. But, we've been talking about how the only space that's really working are the banks and the private banks. One of those reasons could be the fact that S&P, while it upgraded its outlook, not its rating, but its outlook on India as an economy as a whole, they did also have a lot to say about specific banking stocks. So for ICICI Bank, for example, rating and outlook was revised from BBB positive A3 from BBB stable A3. So from stable to positive. And ICICI Bank is up 1% today on an otherwise pretty dismal day. And the reason is that they say that the bank's standalone credit profile was revised upwards from BBB to BBB+. SBI also has a positive outlook from S&P. The outlook has been revised from stable to positive, likewise for Axis. So you're seeing some kind of green over there relatively. Jay, anything in the private banks? I mean, you spoke briefly about how, Bank Nifty was relatively doing okay, but anything from the private banks that you'd pick right now, you'd find this opportunity to pick up?
No, in fact, private banks are slightly weaker compared to the Nifty PSU banks. And so I'll exercise caution here. And the setup in ICICI and Axis, looks like they might have one more higher high above the May high. But I don't think it's a expanding structure. It's probably a limiting move. So even if that were to come through, it will be a limited upside for the private sector banks. So I'll be very cautious. And, I'll maintain a stop at about 1,060 for ICICI. If that were to close, that will signal a medium-term reversal for ICICI Bank. And, generally, rating agencies, they come out and put out their note when it's markets have moved significantly and invariably marks a top or bottom depending on the ratings. So, that's another warning signal. So be cautious there.
Okay, some flashes on IDFC First Bank, of course, preferential issue and the institutions that they've allotted them to. But this is cool. This is par for the course. They'll raise about 3,200 crore via preferential allotment of 39 crore shares, will IDFC First Bank. Some equity issuances. Par for the course for all financial institutions. Need of capital, improves the book value or improves the price per book at least, and which is always welcome. Just the nature of the allottees that they have issued the shares at 80 rupees or 80.60 per share is all institutional and impressive institutions out there. But what has to be impressive is the election result, and with the results just around the corner, markets are on a roller coaster ride with a bit of a negative bias this week. The big question on everyone's mind: how will the market react on the D-Day? Several brokerages have put together what they expect. Joining us now to break it down and help you navigate the election trade are my colleagues Mahima and Rucha. Mahima, let's start with you. Over to you first.
Well, if there's one thing that we've not talked about enough is elections, and there are a slew of brokerage notes, in fact 6 notes that we've compiled, who have to say that how the markets will react to different election scenarios. Well, the first one is Bernstein. They've given 2 different scenarios. First one is a bullish case scenario where BJP alone gets 290 seats and NDA gets more than 340 seats, where we'll see an immediate market rally followed by a short-term profit booking. We're seeing that high single-digit or low double-digit returns for the Nifty in 2020 2024. In this particular scenario, the different sectors, well, infra and capex will continue. Gradual recovery in rural consumption is expected, and a heavy focus will continue in terms of manufacturing. Inflation will stay within a range of 2 to 6%, and fiscal discipline, well, comfortable road towards 4.5% by FY26 is what they're expecting. But there is one more scenario that they've given, which is a base case scenario where BJP gets anywhere between 260 to 290 seats and NDA gets anywhere between 290 to 340 seats, where mild profit booking in the near term is what they're expecting. High single-digit market returns for this year, that is 2024, and private sector capex will pick up. Gradual recovery in rural consumption again on the cards. Manufacturing schemes will likely to continue as they were before, and inflation again will stay within a range of 2 to 6%, and government likely to reduce the fiscal deficit to 4.5% by FY26. But Phillip Capital also has similar opinion. What do they have to say, Rucha?
Right. So Phillip Capital brings out two scenarios to us. Number one is the base case scenario, wherein they believe BJP will bag between 290 to 300 seats, while the NDA, the alliance, will bag between 330 to 340 seats. Now, in such a case, the brokerage house assumes there will be positive stance in the market because the policy will continue and the execution will take place as is happening right now. While the next case is the bullish scenario, wherein the BJP alone bags more than 325 seats and the NDA bags more than 360 seats. Now, this is a very strong scenario which the brokerage house is expecting, and they expect a very sharp rise in equities. But I think Nomura again also have come out with their picks on elections, right?
Right. So Nomura's report is basically based on how economy for the entire country will pan out to be in different election case scenarios. Well, they're saying that if NDA returns to power, medium-term GDP growth of 7 to 8% is expected. In terms of monetary policy, rate cuts of 25 to 50 basis points is what they're expecting. In terms of forex, rupee to remain stable in the first trading session itself, and short-term rally in equity immediately after the results is expected. But there is a second scenario, which is, if India alliance wins, economic impact, they're expecting GDP to dip below 6.5%, and in terms of equity, short-term rally immediately after the election results is what they're expecting. But UBS has come out with a very interesting note based on comparing the two manifestos, that is BJP and Congress manifestos. What do they have to say?
Right. So this is a different pick by the brokerage house, as rightly mentioned. A BJP manifesto has been compared with the Congress manifesto, wherein within the BJP they expect low inflation, high growth and fiscal prudence, while they also expect India to be the third largest economy in the next 5 years under the BJP. I mean, isn't that great? Also, talking about the policy continuity, they think that this will improve business sentiments, and private capex will also begin to recover under the BJP manifesto. Now, comparing the Congress manifesto, they believe that Congress has tried to hit some good notes, but it has a populist skew, as in there'll be more of freebies, etc. And this could entail fiscal deficit higher to a level of 7 to 8.5% of the GDP around. But I think let's talk about what JM has to say on this.
Right. So JM also believes that policy continuity will be impact going forward. They expect BJP to comfortably retain their majority. However, the policy will depend on Karnataka outcome, because the tilt towards populist, as the UBS note says, will depend on how Karnataka results pan out to be. But in their bear case, they're expecting the base case to be around 299 seats. Bear case, they're expecting 290 seats, and bull case, they're expecting around 310 seats. But they've also given as to how the sectors will pan out to be. Well, impact on markets, they're saying policy continuity will ensure opportunities in sectors like defense and capital goods. Valuation comfort is available at present in private banks and consumers is what they're saying. And one thing that stands out in this report is they expect large caps to outperform the small and mid caps in the post-election cycle, which has not been the case so far in the past 1 year. But Rucha, CLSA has a very interesting note on Modi picks. So what are these Modi stocks that they are talking about?
So I think they have utilized a great word called as Modi stocks, the stocks which are directly beneficial from Modi's policies. Now, this brokerage house has identified 54 such companies, and half of these are PSU stocks, which are largely linked to capex and infrastructure stocks. Now, the PSU space includes ONGC, NTPC, NHPC, SBI, IGL and Mahanagar Gas. But within the non-PSU space, they also have Ashok Leyland, Ultratech, L&T, Airtel, Indus Towers and Reliance Industries. But what about the performance after the election results? Now CLSA believes that this kind of rally might, end between June and July. Yeah. But they also believe that 90% of these Modi stocks have outperformed Nifty over the past 6 months. But after the election rally ends, they have a strong bullish view on financials, which is the banking segment of the market.
Right. So I think these are the views that brokerages are making out of the election rally and election results. But we'll have to wait till 4th of June to see what happens exactly to the markets.
Well, and of course, since we're talking about CLSA Modi stocks at the very end, I caught up with Vikash Kumar Jain of CLSA and spoke to him about their note on these Modi stocks. Listen into what he had to say.
What we need to understand is the fact that markets so the note that I wrote about Modi stocks, essentially that's just a catchy terminology to make things simple. But basically, there are these 54 or so stocks, 27 of half of them being PSUs, the other half being non-PSU stocks linked to certain sectors, certain kind of characteristics, which are generally associated more closely to policies of the government. Now, the median return on these stocks is 50% in the last 6 months. 50%. 6 months again, because this has been the period of election rally. When the market has gone up by 15%, Nifty has gone up by 1.5, these stocks have gone up by 5.0. Median. There are stocks which have doubled. Now, that just tells you that there is a lot of excitement that has got baked into these stocks. Some of these stocks were cheaper, like some PSU stocks were cheaper. So they've kind of gone up, caught up to that value trade, and they've gone beyond that. So from a perspective of more near term, if you were to ask me 6, 9, 12 months, of course, these stocks will have to, irrespective of the outcome of the elections, these stocks will have to, hold back, catch up on breath. I think what also starts happening is post-election results, then you start seeing the ministers, and then the discussion moves to the budget, which typically is about 6 weeks, 5 to 7 weeks after the election results. So essentially, then there is a bit of reality check, which kind of happens. So from that perspective, there is going to be many of those events which will make people think that have these stocks moved, at least for the time being, a bit ahead of themselves. And that's why what we predict is a playbook similar to the last 2 times, and sometime in this month, a kind of an interim top for these Modi stocks, as a basket. Then you start separating out. Like right now, they clearly, it's remarkable. 27 PSU stocks in the F&O basket, all of them have outperformed Nifty. All. These come from various sectors. So there's clearly a basket trade happening irrespective of the sector dynamics, which have kind of really played out.
Yeah, well, so PSUs have done the trick. Can PSUs reverse, and can financials maybe come to the fore? Nirav, let me ask you, there's also this news flow on IDFC First Bank doing a preferential issue. I'm just trying to understand, and by the way, some research details from our end. This objective is to take advantage of the upcoming growth opportunities. The capital adequacy for IDFC First will rise quite substantially as a result of this, I would presume. 80 and a half or thereabouts is where I think their fundraise is at. Nirav, financials, IDFC First or HDFC or any of the others, are you guys buyers into any of these?
Not at the moment. I think IDFC Bank, definitely the performance has been improving. But I think we would like to wait for some time before we take a decision relating to this stock. But I think we've been looking at the larger names in banking. ICICI Bank, HDFC Bank also as a contrarian. But I think not looking at IDFC Bank at this point of time.
Not IDFC First, not IDFC Bank, but maybe a larger bank. Jayabala, financials have held out well today. If you had to bet on buying into a banking stock today now, about 20 minutes to close, would you do that, and which one would that be?
If I have to be forced to do it, then I will do it. Otherwise, I will avoid it.
No. We're not forcing you. We're not forcing you, Jeff. Let's
No,
not
I don't find
force
anything
trading.
attractive. But the best out there is ICICI Bank. But I don't find it a sensible trade at this point of time. But outside the financial, there is a buying opportunity. Probably in Bata. Bata is today breaking out of an inverse head and shoulders pattern. It's been a laggard for several months now, and if a stop loss about 1330 for a potential to about 1500 plus. That's a buying candidate for today. So that's an interesting stock, and it's developing a breakout on a day the markets have been underperforming. So it's an interesting pick out there. But be very cautious on all longs. You got to scale down your about 1/3 to 50% of your regular allocation. So all longs need to be cautious because the markets have priced in an incumbent victory. If anything that goes on the other side or anything that's short of the expectation, the potential for the markets is to the downside.
Bata is interesting because their numbers that were out today saw an improvement from what we've seen in the last few quarters as well. They're looking at a 10 to 11% CAGR of growth in volumes. But the stock not doing too much. Perhaps that's the case for a lot of counters this afternoon. And Agam is joining us now to set up the F&O data for closing trade. Agam, it's been a tough couple of sessions and that continues today, one presumes.
Yes, absolutely. Certainly for the bulls, because for all those who are placing bets towards the upside, where that's not working out. But over the past couple of days, the trend on the downside has been a little bit more prominent as compared to perhaps bullish trades that were being played. Let's take a look at the Nifty now. Of course, today is the monthly expiry, and we're looking at rollovers around 65%. Average perhaps a little lower than average, but this is also on expected lines. I'm sure that a lot of participants would not want to carry forward positions, perhaps go light before the outcome of the general elections the early next week. That said, rollovers currently at 65%. The Bank Nifty futures, the Bank Nifty was up substantially, the underlying, earlier on the session, but it's given up a lot of its gains. For now, up only 0.3%. Once again, losing out on 49,000. And again, 12% added in June futures, but that is also more or less on expected lines because this is early days in the Bank Nifty. As far as the option market is concerned, we were seeing writing in the 23,000 call in the session before. Yesterday, we saw about the 22,800, 22,900 calls being activated, and at the moment that has gone further down, and we have the most amount of activity in 22,600 and 22,500 calls, and also because the Nifty is in below about the mark of 22,500. It's testing those levels at the moment. That's where the underlying is. And again, this is your overall open interest distribution picture. Nothing out of the ordinary on expected lines. A lot more calls which were written stand out there. A lot of unwinding and puts in the last 15 minutes of trade, specifically since the Nifty lost out on, or rather has been testing 22,500 on the lower end. Moving on, of course, we're talking about stocks, and in terms of stocks, it's been not the best day because we're actually looking at a lot of shorts building in. Mind you, this is June futures. Piramal Enterprises, Biocon, Marico, Titan, Tata Steel, all of them losing out, all of them seeing a substantial build-up in OI. Not much to speak for otherwise when it comes to unwinding in OI for June futures. Again, like I said, it's early days, but overall a weak market, and I reckon that it's going to continue to be this way. At least it's going to continue to be choppy for the next 3 to 4 sessions as well.
Yeah, definitely for the next 3 sessions, I could say. Friday, Monday and Tuesday will be absolutely crucial, and we'll have to see if this is the spate of profit booking, perhaps pre the results that we're seeing. Are we setting the stage for a pullback once the numbers are out, and if they are in line with what the street expects? Nirav, I wanted to come to you on the larger metals story, and you spoke briefly about Tata Steel and why that has been a disappointment today. In a sense, what the concerns are, it's dragged down the entire index. But what about the broader, metal stocks, Hindustan Copper, Hind Zinc, Vedanta has been back in focus. Any of those that would be on the top of your list if you were to look at metals once again?
Yes, I think at this point in time, as I pointed out, that the steel story is very well discounted. And going forward, we are expecting the prices to come under some sort of pressure. But as far as the other story is concerned, we have Hindalco, where, of course, we have the Novelis listing, which is there on the cards. So I think Hindalco has been an exciting prospect. And apart from that, one can also look at Hindustan Zinc, which has been moving up. And the cash flows out there and the prospects seem to be very exciting. So I think I would like to look at both these stocks, Hindalco as well as Hindustan Zinc.
The valuations of Hindustan Zinc don't deter you, Nirav?
Still, I think there is quite some potential left, although it is expensive. But I think the kind of position which they are in, they are the largest producers of zinc, lead, silver, etc. So I think that is giving a lot of confidence.
Okay. Well, it is not great for the markets though per se, about or just in or around the percent mark. So that's to be kept in mind. You know, the other thing that has happened is Cummins India. Now, mixed views on how the commentary has been, but my colleague Puneet has gone through what was spoken about in the con call and whether that carries some devil in the detail, or is this purely because of the valuations? Because Puneet, normally one would think that with such a beat on margins, a stock will not really crack so badly. So is it something to do with the con call, or is it maybe valuations or something else?
Well, that is one of the key concerns, but it looks like the latter, where the valuations would be a key concern. But just to run you through quickly, the revenue was up 20%, while EBITDA and profitability are up 60%. While we had margins also increased by roughly 600 basis points. But if you look at the con call highlights, it was largely very positive by the company here. Now, if you look at just the key details, now the exports have been down by roughly 30%, and the management said that, going forward, they are expecting a slight, difficulty in the first 6 months. They see that geopolitical issues is one of the key concerns. And they are saying that the Africa, which is one of the bigger markets for it, there is some funding unavailability there, which is impacting volumes. But the domestic market has been really strong. This quarter, it has grown by roughly 38%, and a similar number for the full year as well. If you look at, the market will be, currently seeing a demand shift to the new products, basically, which is the new norms which are coming into this financial year, which is the CPCB 4+ products. Now, Cummins India was well ahead of the curve. They had already launched this product last year, and currently a third of their sales for this fiscal has been in the new product. So they had pricing as well as the product ready in the past fiscal year as well. Now, going forward, the management has indicated that competition will be coming into this new norms and launching their products by the CPCB 4 products. There will be some pricing that will be, in a key contention here, but management has said that, until Q2 there is no concern such, and post that also it should kind of, help hold on to its particular gross margins of roughly 33 to 35%, but they have mentioned that they will update the street on that matter. When we see that future growth, the company has said that it's expecting to grow double of the GDP for the next 10 to 12 years. 12 to 16% is what they are expecting over this particular time frame as well. When you look at the industrial business, which is another key addition for the company, that is driven by the big construction volumes that we've seen, and the company is saying that, post-election they are expecting a larger ramp up to happen in this segment as well. On new products, Vande Bharat is one of the key things that they have been targeting, and they have said that, going forward, multiple launches are expected into this space as well. The royalty, which is the key thing when we look at all MNC companies, is down from 3% to 1.7%, and for the next fiscal year also, the company is expecting to maintain it to the same range. Now, Nomura had written a note before, the con call, which was today morning, and they had just down a 20% downside from the current levels at around 3,040 rupees, but that is purely on valuation concerns. This is because currently the stock is trading at 61 times its PE, and for FY25 and 51 times for FY26. But they have said that the company's strength is the products, its innovation, and that is likely to continue going forward as well. Back to you.
All right. Well, 6% down, and viewers, remember, you will hear the management tomorrow at 9:30 a.m. on NDTV Profit, so you don't want to miss that conversation. Aswath Ram talking to us live, but I think it's it has to be also seen in perspective of the point that unlike an ABB which guided to margins continuity for the year, Cummins hasn't been that confident about the second half when competition comes in, as Puneet was talking about. A completely different line of business per se. I'm just kind of comparing an MNC to another MNC, but the lines of business are completely different, of course. But yeah, you know, despite strong margin performance, and I really thought in the morning that this would be one stock that will do really well. Somehow it's done anything but that. Nirav, MNC stock, actually, first let's get the trade on this one. Jay, can I come to you first on this one? 6% lower for a stock that has otherwise done well. Does it open up some downsides? Would you go out and trade this one?
Yeah, it does open up the short downside, but it's just short term. It's I don't think it's topped out for the medium term and long term. But the short term downsides could be something like 15 to 20%. So 3,000 odds could be the nearest support, but it's a very risky shot because the medium term and long term trend is strongly up. And I see this as a corrective pullback somewhere close to about 3,000 mark. Could be a shade lower than that. But I still believe all the MNC names that you have mentioned, Cummins, Siemens, ABB, I don't think any of them have topped out, but they could see some short-term sharp pullback that shocks a lot of long holders. So but I believe they have higher upsides in the medium term, but short-term shock is pending.
Yeah, this is what happens with stocks which are so expensive that even if there is a sharp pullback, the stock will still not look cheap, and people will be able to justify this as this pullback as well, as is the case with Cummins today. Even after the 6% pullback, it's not that Cummins is cheap at all. So that's the real point. But Nirav, I mean, you heard the commentary probably. You heard my colleague Puneet speak about the commentary too. Are you a buyer in Cummins, or are there better options there?
No, actually, one important factor is that while it is still permissible to sell the CPCB 2 series, that is the Central Pollution Control Board 2 series of products under the power generators, the company has already introduced CPCB 4 plus series, and that is going to become mandatory quite soon. Now, it's important to understand from the management what is the price differential between 4 and 2, which I believe should be substantial. And to my mind, I think that should impact demand to a certain extent going forward. And that could be an apprehension which the market could have at this point of time. Secondly, the company has said that the exports continue to be muted. And the third factor is that going forward, Cummins expects the material cost pressure also to bite in the near future. So I think these are some of the factors which could have made the market a bit nervous. And I think we need to have clarity on all these factors before we decide to take a call on this stock.
Just another stock that is completely buzzing today, and this is because of their numbers, RHI Magnesita. Look at that stock this afternoon, 11% up, huge spike up there. So their losses have narrowed. Numbers came out yesterday actually. Revenue from operations have also increased, but it's the EBITDA margin figure which perhaps has the street excited. It was 5.4% last year, same quarter, and has gone up 15.7%. Now, this refractory company is, of course, in the small cap space. Nirav, is this a stock that you're tracking at all, a company that you're tracking?
Yeah, we used to look at this stock, but now it's become quite expensive. It's a wonderful company, RHI Magnesita, and MNC company again. And they are into the refractory business, and these are used in various industries like steel, cement, glass products, etc. And this company has got a very, very strong margin trajectory. A very strong set of numbers were reported by the company, and consequently, we are seeing a strong pullback in this stock at this point of time. But we haven't seen it at this point of time for the simple reason that it looks very expensive.
Perhaps looking even more expensive now after the up move today. Jay, is this a stock you track at all?
Yeah, I do. And it looks like it's heading to fresh all-time highs. But I won't be buying at this level. I'm not saying it's going to pull back, but if it does pull back somewhere around 680, that will be an attractive entry point. The risk reward, it's not a safe long at this point. The stop loss comes at about 585, so it doesn't make sense to go long. But I think it's heading to fresh 52-week highs.
Another theme perhaps that we can talk about today is all your capital market plays, and they've been favorites for a while. All of them seeing profit booking today. Nuvama, one of them, the others also in that space. Angel, we should pull up and see what's happening over there. And I'm wondering whether this is merely profit booking or more to the story.
Yeah. No, it's a great spot, Tamanna. Motilal Oswal should be the other one. 361 should be the other one, and that's the pocket that Tamanna is talking about. Not everything, but yeah, Tamanna, she's right. And okay, anybody's guess, but you probably attribute this to profit booking because if independent of what happens, the capital market story in India still alive and kicking. But really doubt that. Scores of demat accounts created.
Yeah, but lot of push of making it easy by SEBI to trade directly and perhaps cut out the middleman. All of those regulations and all of those guidelines still need to play out.
Agreed.
I don't know what the impact would be on profitability though.
Yeah, maybe but for the likes of Nuvama or Motilal or the wealth management.
Yeah, they're managing wealth. There's more enough and more wealth to manage. So maybe a bit of profit booking there more than anything else. But profit booking is the name of the game. Look at a campus. Yeah. Just completely flying after its numbers and that money being taken off the table. Look at a Mazgaon, Cochin. We started the day talking about that. And once again, you are seeing some profit booking over there. I think it's that time of the afternoon where, Jay, we have to ask you the BTST question. And, I love hearing the answers in these kind of markets because would you really stick your neck out and mention a couple of counters that are BTST or STBT?
For a technician, that's not a big deal. It's something that we do every day. And for us, today, the most attractive stock for that is a STBT on Bajaj Finserv. It's breaking down from a head and shoulder stop. The breakdown below 1540 is signaling that the stock is heading somewhere close to 1330 from a 2 to 3 weeks time frame. So the breakdown is happening today. Finserv, not Bajaj Finance, Bajaj Finserv. The stop loss for the positional trade will be about 1620, and the objective is 1330. And right now it's trading about 1525.
Okay, so Bajaj Finance is that one call. Nirav, do you have any sort of set of stocks that you're looking out for tomorrow?
I'll be looking at a couple of sectors. One is auto sector and the second is shipbuilding space. I think both these have exciting prospects, at least in the near term.
Well, these stocks clearly stand out almost every single time. So that's to be kept in mind. Actually, Nirav, just one quick follow-up on a point that Jay mentioned, that if there might be sharp cracks into some of these MNC names, fundamentally which one looks the strongest? And there are different industries. ABB and Siemens different, Cummins different, SKF is a different one, 3M, which declared a large dividend, is different. Which one would stand out for you?
I think I would like to look at ABB, Siemens, companies like in the water space, Ion Exchange, Timken. These companies have tremendous potential to move up from the current levels. And the user industries also are performing quite well. The demand trajectory is quite strong. The technology leadership is there. So I think I would particularly look at all these names, whether it is ABB, Siemens, or Ion Exchange, Timken. These would be the preferred names.
All right, we're winding down to the last few minutes. In fact, just less than 2 minutes or so of trade. So We're going to thank you both there, Jay and Nirav. Thank you so much for joining us this afternoon. Let's just take a look at where we're settling, and at least we look like we're possibly in the position of closing above 22,500 on the Nifty. I mean, still a couple of minutes left, so who knows, but looks like we'll close above 22,500, and that's important because this is a market that has been bruised quite badly through the last couple of sessions, and that continues today. The only outlier I would mark is the Bank Nifty, really, and that's been quite marvelous. Let's pull up the components of the Bank Nifty once again, and all of those private sector banks are doing well today. ICICI Bank, they're right on top. IDFC First with its fundraise plan, which came in just a short while ago. HDFC Bank, SBI, perhaps a combination of factors there. Some could be the S&P, positive outlook in a lot of cases from stable to positive, and fundraise, etc. Maybe it's looking fairly valued at this point. What's hurting today? Tech is hurting, definitely. Metals the most. I mean, that's really the most painful area of the market today, 2.5% down. And as we close down, we should look at some of those components: Hindustan Zinc, Hindustan Copper, Tata Steel. How can we not talk about Tata Steel? Seeing the big pain over there. And, Niraj, I think this is interesting that not just okay numbers with a positive outlook is not palatable in a market like this. You have to really, drive it home, hit a 6, so to speak, for the street.
Cummins actually hit a 6 on the margins and still is down 6%.
But outlook, now you're positive also, your outlook needs to be positive now. Yeah. You need to, everything has to be pitch perfect.
I'm saying corroborating your point that even when that is happening, stocks are getting sold in. So God save those stocks which are not quite delivering, and especially in a market scenario like this. Very quickly, just the Nifty IT, and as we have shut shop, Nifty IT is just been taken to the cleaners today, 2% lower, as the Nifty, by the way, and the close has just recouped some of those losses. We were down about 1%, and we are now down about 0.65%. So if you look at the intraday of the Nifty, yes, it is still wobbly. It is not a good close, but just bring up the intraday of the Nifty. There is not the post-close element. You see that bit of a spike there, and I wonder if we can pull up the heat map on the wall. And what has to be banks, yes, obviously, but ICICI Bank probably piled on, and HDFC Bank did too, because I think they were in the green, yes, but I think they moved further strongly. So that was that one thing. And maybe, just maybe, some of the IT losses stayed as they are. So it has to be banks which actually did well. Just wonder if the Bank Nifty chart mirrors that one on the Nifty as well. And just see there, right? A bit of a spike in the Bank Nifty too in the end. So I think that is what did the trick for the Nifty. The Nifty followed the Nifty Bank in the last 15 minutes of trade. So some bit of bottom buying, or maybe intraday short covering or expiry-led movements happened here. And Tamanna, lastly, just from mine at least, the VIX should come up, and we'll monitor this very, very closely. It might stay elevated for the next 3 days, but very, very interested to see how we do during the day tomorrow, as it's also a day, Tamanna, wherein the MSCI rebalance flows come in, and that 2.5 billion as they come in, whether they come in post noon or otherwise, could also be an important factor.
Yeah, that might be some kind of breather, perhaps, for the markets, but I doubt anyone will take any major positions, maybe not shorts, but any major positions before they have a clearer picture on June 3rd. I would just say one quick line: beware of a lot of WhatsApp forwards and claims of numbers and exit polls. No one knows anything till the last vote is polled on phase 7. So this is where the rumor mills sort of go bonkers. Just a quick couple of stocks to mention before we wrap up for the day: Emami and RHI Magnesita. Just because what a whopper of a move through the day on an otherwise very weak markets day, and these are a couple of stocks that have had good stellar results. I wouldn't say stellar in RHI's case, but at least huge improvement in margins, and they've narrowed their losses. On the losing side, an IRB Infra, KFin Tech, both of them seeing that largely because of block deals, perhaps. Cummins, not responding to the numbers at all, and that was the pain point that we saw through the day. Nevertheless, it's been a bit of a dismal day for the markets. Let's see what Friday brings and whether there is any kind of cheer before the big events following through the start of next week. But for now, from Niraj, me and the team that puts this show together, thank you so much for joining us on India Market Close. A lot more coming up on the other side on NDTV Profit.